Greetings everyone. So guys, in this recording I will be doing earnings per share questions. So let us do the first one. So we are given information here, so we're gonna read information and then I will show you how to perform your calculations. Adasol Limited has the following shares in issue throughout 2021 financial period. So they've got 10,000 ordinary shares in issue, and they also have 1,000 10% redeemable preference shares issued for 2 rand each. So guys, here we've got two classes of shares. We've got ordinary shares and preference shares. So guys, if you are told that your preference shares are non-redeemable, this means that the capital will not be paid back to preference shareholders. So you treat this one as an equity, not a liability, because we are not gonna pay back the capital to preference shareholders. And then this 10% is the rate that we use to calculate preference dividend, which is the amount that we're gonna pay over to preference shareholders. So preference dividends. The preference dividends are non-cumulative. So guys, you can be told that the preference dividends are cumulative, and you can also be told that they are cumulative, and you can be told that they are non-cumulative. So if you are told that preference dividends are non-cumulative, it means that if the company did not pay dividend during the current year, that amount can never be carried forward. That amount can never be paid, in the next period. So that is the meaning of non-cumulative. If the company decided not to pay those preference dividends during the current year, they become forfeited. So the company cannot pay them in the next financial period. So they are not carried forward. But if your dividends are cumulative, so if the company did not pay them during the current year, the company will pay them in the next period or in the future period. So that is the difference, guys. There is nothing much that you must worry about here. And then the company earns a profit after tax of 100,000. This is the profit after tax. Guys, we know that the profit is going to be split between ordinary shareholders and preference shareholders. So from this profit, there is a portion that will be paid to ordinary shareholders, and there is another portion that will be paid to preference shareholders. So the company declared the full 2021 dividends owing to preference shareholders. So all the dividends were declared and paid to preference shareholders. So we are not owing preference shareholders anything. So required, calculate the basic earnings per share on 31st December 2021. So guys, you need to follow steps here. So if you are required to calculate basic earnings, you're gonna first calculate the basic earnings, which is your numerator value, and then step number 2, you calculate what we call basic Y-NOS, which is your denominator. So now let us follow the 2 steps. So here we are doing step number 1. So in step number 1, we calculate. So let me write here. Step number 1, we calculate. Step number 1, we calculate basic earnings. So guys, what is basic earnings? Basic earnings is the profit that is directly attributable to ordinary shareholders. So guys, in simple terms, this is the profit that belongs to ordinary shareholders. Remember, I told you that since we are told that the company made the profit of 100,000, so this 100,000 will not be fully allocated to ordinary shareholders. There is a portion of this profit that will go to preference shareholders, and then the remaining profit after the payment of what is due to preference shareholders. So after that payment has been made, the remaining balance will be due to ordinary shareholders. So the balance that is due to be paid to ordinary shareholders is what we call basic earnings. So guys, for us to get basic earnings, we take the profits after tax, profits for the year, and then guys, we subtract the portion that is due to be paid to preference shareholders. So we know that these shareholders, preference shareholders, they are entitled to receive 10% dividends. So we're gonna subtract what they are entitled to receive. So which is preference dividends. So guys, once these dividends being paid, the remaining balance now will be due to ordinary shareholders. So that is basic earnings. Basic earnings. So guys, in simple terms, basic earnings is the profit that belongs to ordinary shareholders. So now let us put in our figures here. So how much is the total profit? 100,000. So we bought 100,000, and then we're gonna calculate preference dividends. So now let us calculate preference dividends. How do we do that? So preference dividends, we must first calculate the capital, preference capital. So to get the preference capital, it's simple, guys. You take the number of preference shares in issue, number of preference shares in issue, and then you multiply by issue price. That's how you get your preference capital. So preference capital is equals to number of shares, number of preference shares in issue times issue price. So guys, we are told that the number of shares, preference shares in issue, is 1,000 shares. 1,000 preference shares. You're gonna multiply this by 2 rand because each share was issued for how much? For 2 rand. So times 2 rand. So this will give us a capital of 2,000. So the capital here is 2,000. So guys, now to calculate your dividends, you take the capital and then you multiply by 10%. Guys, do not apply the rate 10% on the number of instruments, but this 10% you apply it on the capital. So the capital is 2,000. So you're gonna take capital of 2,000 multiplied by the rates of 10%, and then this gives 10% of 2,000. So this is 200. So guys, 200 is the portion that belongs to preference shareholders. So these preference dividends of 200 belongs to preference shareholders. So that is why we subtract it. So now from the total profit, if we take out what belongs to preference shareholders, we're gonna be left with what belongs to ordinary shareholders. So 100,000 minus 200. So now you punch your calculator. So I'm getting 99,800. So guys, 99,800 is the portion of the profit that belongs to ordinary shareholders. So this is our basic earnings. So guys, I hope you are following. And then we're done with step number 1. So guys, this one will be our numerator. So let me show it here. So now this will be our numerator. And then step number 2. Now we are on step 2. Step number 2. We calculate basic YNOS. So YNOS stands for weighted average number of ordinary shares. So guys, how do we get basic YNOS? So to get basic YNOS, you take the number of ordinary shares in issue at the beginning, number of ordinary shares in issue at the beginning of the year, you add. So I will give you the full format of basic YNOS, and then you add new shares issued so you add the new shares issued for value. So like if you are told that during the year the company issued 5,000 shares for 350 each. So now if you are told that the company issued the new shares for a value, then you're gonna capitalize, you're gonna add those shares, but remember to apportion based on a time factor. So here you must always remember to do your apportionment. So now if you want to apportion here, you're gonna check when were these new shares issued. So let's say the year end is 31st December, and then shares were issued on the 1st of July. So now you can count from July, from you count from the date, shares are available now. So you're gonna start from July till year end. So from July to December, that is 6 months. So you're gonna apportion by 6/12. Why? Because the shares those only for 6 months. So that's how you're gonna apportion. So you use the time factor uh, method to apportion for new shares issued for value. And then you also capitalize for capitalization of shares. So if you are told that the company performed the capitalization, guys, capitalization is whereby a company gives shares to existing shareholders at no consideration. So these are shares given for mahala. So shareholders pays nothing for these shares. So these shares are given for mahala. So if there is a capitalization, you also add that, and then for capitalization, there is no apportionment that you do. So you just capitalize the full amount of shares that were allocated to shareholders. So you don't apportion here because these were given at no value, at no consideration, capitalization. Same thing applies if you have bonus shares, if you have like right issue. So I will give, but I will explain. I will do a recording whereby I will explain in full the issue of right issue. If you have right issue, share right issue, this calculation will have two components. There will be a component that is issued for value, and there will be a bonus component. But don't stress, I will do a recording where I will give a full explanation on the right issue of ordinary shares. So guys, and then also the share splits. If the company performed the share split, you also include that in your basic minus calculation. So guys, here I'm giving you the list of components also by now basic minus. So you will have number of shares in issue at the beginning. If the company issued new shares during the current year, you're gonna capitalize those shares, and remember to apportion based on the time factor. And then if there was a capitalization performed by the company, you include or you capitalize those shares issued for mahala. And if there is a right issue, you do. Okay, but I will explain this one for now. I don't want to get into detail because this one is like there's a process for right issue. So for now, let us ignore this one. I will come back with a video that will be focusing on the right issue, and then share split. So this is what you include in the calculation of basic minus. Now back to our question. So in this, we have only 10,000 shares, which is the number of shares that were available at the beginning. So we are not told here that the company issued more shares during the year. So there is no new shares issued. So so no new shares were issued during the year. So we only have 10,000. We only have 10,000 shares available at the beginning of the year. And then this will be our basic minus. So guys, let me remove this. So I will do questions that will involve the capitalization of shares, right issue, and share split. Don't stress. So for now, we are still doing the basics. So we're gonna include now in this calculation, basic minus calculation, only 10,000, which is the number of shares available at the beginning of the year. So basic minus. So basic minus is 10,000 because there were no changes in the capital structure. And then now we can now calculate BEPS, basic earnings per share. So guys, the formula to calculate basic earnings per share, you take your the answer from step 1, which is basic earnings. You take basic earnings, you divide by the answer you got in step 2, so which is basic minus. So there is a division line here. So basic earnings per share BEPS equals to basic earnings divided by basic minus. So it's simple, step 1 divided by step 2. So now let us sub in our values. So now we're going to plug in values. So basic earnings is 99,800 divided by basic Y0 of 10,000. So guys, we divide the two. So we divide. So now you just punch this in your calculator. 99,800 divided by 10,000. So I'm getting 9,98. So this is 9 rand 98 cent per share. So each share is earning 9 rand 98 cent from the profit attributable to ordinary shareholders. So each share is earning 9 rand 98 cents. Guys, you can even write this in cents. If you want to get this in cents, you simply multiply by 100. So when you say 9,98 times 100, you will get 998, and then you specify here that this is the number of cents. So you can disclose this in rands. You can also disclose your earnings per share, basic earnings per share, and 98 cents per share. And then if you express this in cents, it's going to be 998 cents. So you multiply by 100 to express it as a cent. Guys, this is the end of our first question. So I will come back with the second one. Goodbye.